Welcome to the Apprentice Trading Library. In this segment, we will provide you with a look into ETFs versus mutual funds, key differences and use cases. ETFs, exchange trade funds, and mutual funds are two of the most popular investment vehicles for building wealth. But which one is right for you? Today, we'll break down their key differences and when to use each. Let's dive in. You may be wondering, what are ETFs and mutual funds? An exchange-traded fund, ETF, is a collection of securities that trades on an exchange, much like a stock. It provides instant diversification and can track indexes, sectors, or commodities. A mutual fund, on the other hand, pools money from investors to buy a diversified portfolio of assets, which are managed by professionals, often designed for long-term growth. Let's begin by comparing ETFs and mutual funds. First comparison is the trading style. ETF are bought and sold throughout the trading day at market prices, while mutual funds are priced once daily after the market closes. Next, let's compare the costs of both. ETFs are typically lower expense ratios and no minimum investment. However, mutual funds have higher fees, including potential sales loads and minimum investment requirements. Taking a look at management of the two, you will see that ETFs are usually passively managed, tracking an index. But mutual funds can be actively managed, aiming to outperform the market. Now, let's look at tax efficiency for the two. ETFs are more tax efficient due to in-kind creation/redemption processes. While mutual funds have higher capital gains, distributions can result in more taxes. And finally, let's compare the flexibility levels between the two. ETFs are ideal for active traders or those seeking intraday liquidity, and mutual funds are better suited for long-term, hands-off investors. So, when should you use ETFs? ETFs might be your best choice if you want to trade throughout the day. You prefer lower fees and expense ratios. You're looking for tax efficiency, or you're investing in specific sectors or themes like tech or clean energy. On the flip side, you should consider mutual funds if you prefer professional management. You're investing for long-term goals like retirement. You don't need intraday liquidity. And finally, if you're seeking an actively managed strategy to outperform the market. Now I bet you're wondering, can I use both ETF and mutual funds? Absolutely. Many investors use both to balance their portfolios. For example, you will want to use ETFs for cost-efficient short-term trades or specific market exposures, and use mutual funds for actively managed strategies and long-term goals. ETFs and mutual funds each have their strengths. By understanding their differences and use cases, you can build a portfolio tailored to your goals. Thank you for watching the Apprentice Trading Library. Ready to explore and learn more? Please visit verifiedinvesting.com for more.